Hello everyone, welcome back to Chill Trades, the most accurate stock market channel on YouTube. Today we're going to be covering SOFI stock. This is one we did a while ago. It's probably been a couple months since we covered it, around the $14 price point where we said insiders were buying, consider it. It's made a little move, so we're going to do an update on should you buy now. We're going to review earnings, look at everything that's happened as of recent, and then dive into the technicals to see how the prices are looking. Okay. So if you're here, you haven't subbed, please sub to the channel. We're growing. Get us to 700 subs. That is the goal. Okay, so first let's just look over at SOFI holistically. So right now, $15 billion market cap. They have, the sales are incorrect, but we know that they are still not making money as a company. Part of that's due to some acquisitions. Another part is the only way that they're growing 35% year over year is due to spending a buttload of cash to acquire customers. So that's kind of what we know at a holistic basis. A couple of things to highlight that we'll talk about more. Insiders, negative 83% buying recently. And then institutions own about 29%. We'll jump into that. And a couple other things. Short float, 7%. It's a little bit elevated. Nothing too frightening, but a little bit elevated. And they have a ton of shares, and we're going to point out why that's important. So let's dive into just quickly their last earnings. So 35% growth, like I said. Their net income decreased, but that was mostly due to an acquisition, which made their net income look really bad last quarter. But still, they're losing $30 million. So when we really got to put everything together, we look at 2020, they made $500 million, but they lost $225 million to get that. And so looking into this year, we're seeing a similar trend. 200 million, they lost 175 million. 200 lost 165 million. This is much better quarter than the last two. So looking into their earnings in early next year for Q4, we're going to really have to look at if this trend continues. If we're seeing net income decrease significantly, these were probably a little elevated for acquisitions and such. But if we start seeing revenue stay high, but those net income stay lower, then this company is heading in the right direction. Holistically, you know my thoughts on this company. This company is not worth $15 billion today. I think their sales this year are up about, let's see, holistic. They'll probably be about 60-70% higher than last year. So they'll hit around $1 billion in revenue. $1 billion in revenue. Next year, and they're still losing, say, $300 million. I don't know how that computes to a $15 billion valuation. The numbers just don't add up. They have a lot more, in my opinion, to prove before they get that $15 market cap valuation. But let's go on to more news. So we covered that. Cash on hand, this is really interesting, and we'll jump into something that happened. The CEO sold some shares to raise cash. So my feeling is that they're probably going to have to raise more cash through more share offerings. This is just not enough cash to continue to propel the business forward. They're going to need at least $2-3 billion, and it's going to be a while till they break even. I think we still have probably another year at least of seeing a net negative income, so they're going to need more money to fulfill that. And the only way to fulfill that is to offer more shares. So when we look at this, 600 million shares, and they're going to have to offer more shares, that makes it really hard for the stock to move up and down. So as we move forward, as they dilute more, this price is going to have a lot harder time moving up and down so frequently. So those are things to keep an eye on. Something that's interesting, we know the stock has been selling off pretty substantially recently, along with basically all of fintech. And so what is going on with fintech? Why are they selling off? Part of the reason, in my opinion, is, among many things, these high growth names, specifically in fintech, with all the excitement around things shifting to e-commerce, with crypto, with digital wallets, new platforms coming up like SOFI. I think everything's got a little hot there. And so, CNBC, kind of BS site, but I just wanted to point out that this is something that we're seeing across the board. We're seeing that these market valuations are soaring, both in the public and private sector. And for example, PayPal, $242 billion market cap, which is ridiculous. PayPal selling off for a reason, because the valuation is ridiculous. But it said if we look at traditional value metrics, many companies trade at 10 times what the normal company would trade for that kind of thing. And we're seeing these valuations just crazy high, and we need to see some softening. Again, SOFI, amazing company long term. In the short term, I do not believe that they're worth 15 billion. Short term, I mean 1 to 2, 3 years. So something really interesting that we're seeing a lot of insiders trading and getting rid of shares. So when we look down, who's selling? Director, vice chairman, insider. So obviously, part of the reason they're selling is just to make some money. They got these shares on pennies on a dollar, and so they're, wringing out millions of dollars because they played this well. They got in early, and they're able to make money off of it. What I want to dive into is more, I would say it's more than just people on the board selling. It's actually big foundational investors that are starting to get rid of some of their positions. So we saw the secondary offering, and we jump into it. We saw things like SoftBank. We see things like Chamath. People are getting rid of shares and taking some of that profit. These are people who got in, I think, pre-SPAC for the most part, some of them after SPAC, reverse merger. But that's important because what that does is it increases the share float. The share float gets bigger and bigger when they get rid of shares. And so what that means is it makes more and more buyers have to be in the market. So more retail traders, more institutions outside of these early investors. And so that makes the stock harder to move up and down. It's going to be a little less volatile, which is good, but not so good when the stock is, in my opinion, overvalued at 15 billion. On the pro side, there are pros and cons to everything. We are still seeing a lot of buying. So we mentioned in the last video, a lot of people bought on that $14 dip. They kind of stopped buying after the stock started moving up, but we're still seeing a little bit of buying here. Not as much as recent. As we know, there's a lot of shares. So 1 million shares here, 500, it doesn't really do much for a stock that has 600 million shares. So 2 billion might look nice, but for the amount of shares that they have, 2 billion doesn't really impact the price that much. We're going to want to start seeing 20, 30, 40 billion in shares purchased for this company to really start accelerating to the upside. We got into it. He sold 15%, but we'll skip that because this video is going fast today. I'm really curious what you guys think. Do you think I'm seeing something wrong about the company? Do you think they're worth 15 billion? I'm really curious. So what I want to go to now is, where am I at? I'm on the wrong thing. Let's go back here real quick. Here we go. So this is their earnings quarter. So what we're seeing is this is kind of, we're growing, but we're not going crazy. And so when we look year over year, this is saying 41% change. We know that was around 35%, but this is overall for the business. And so we're still seeing growth, which is good. We'll dive into the numbers to see what's growing. But for a company, honestly, that's worth this much, I would want to see this growth sustain for a couple years. And I think that's where we're getting into the iffy part. Is this company continue to grow that substantially? And we look at some of their, their numbers. I'm on the wrong. Here we go. Price to normalize earnings. We're at 35 for this quarter. They're projecting 76 for next. Honestly, I think that's a little bit too high. That's pretty rich for, especially with fintech selling off right now. But those are the main things I wanted to call out there. What's more important is going into the earnings. So, like I said, earnings was good for a lot of reasons. Year-over-year member growth, 100%. We know that the more people that get on the platform, the more incremental revenue they have, investing, their loans, things like that. Total products up 108%, good. These are all great numbers. Money, investing, credit cards drove 80% new member growth, 70% of cross-buy, so people are signing up for multiple services. Those are good things because it means that SOFI is becoming their hub to make decisions for every aspect of your life. Lots of positives here for the long term. When we're looking at growth, we already covered it, 35%. Net loss, a little bit less than last year. That's good. If we scroll down more, because we just mostly want to look at these tables. Lending, total lending up a little bit, up 30%. That's good to see. This is the more interesting part I wanted to get to. So this is breaking out the different types of loans they have. So home loans, personal loans, student loans. We really see the majority of their growth coming from personal loans. And this is where I get things a little questionable. There's pros and cons. We know interest rates are going to go up next year. The Fed's already saying it. So that's pro on them making more money on interest rates. The con is, I think we're around the top of loan taking. And so we know that when student loan forgiveness ends next year, that's going to give a big pop to student loans, as we're seeing it's down. But on the reverse, as people's expenses go up, we're going to see much less personal loans. We're going to see much less home loans as we're seeing the home market soften. And so these two are going to slow down substantially, with probably student loans not making up the difference. And so that's where it's going to be creating a little bit of friction for the company. And that's something we really want to pay attention to. In terms of products, this is just showing the products. So 75, when we look at personal loans, it's only up 18% on the amount of them taken. It looks a lot better here on the dollar amount. So maybe people are just taking out bigger loans because interest rates are so low. But these are things to pay attention to on type of loans. Next thing I wanted to get to is, here we go, financial services. So what's really interesting, I think, happening in the market is investing. So I think it was really smart for SoFi to open up investing. But on the flip side, we know a lot of this growth is happening because of crypto. Crypto's blowing up. We're seeing so much volume there. For me, that's more of a red flag. Those are things we need to pay attention to, where these are areas that might see softening. For a business that's growing, anything that's softening has to be made up somewhere else, like we mentioned with loans. So those are things we need to pay attention to. When Q4 comes, how is this looking quarter over quarter? Not just year over year, because that's all they're listing here, but how are they looking quarter over quarter? Where are we seeing that growth and where are we not seeing growth? I want to say that was the majority. There might have been one more thing. Kind of already covered that. Yeah, let's get to technical since we don't have a lot of time left. Cash, we already talked about that. Probably going to need to dilute. Yep, let's get to technicals. We only got a couple minutes left because we like 15-minute videos here. Okay, big picture. RSI is back under 50. Red flag. We don't know if it's confirmed yet. It could just be a sell-off because it got oversold or overbought and it needs to soften a little bit. But we're in a really important price range right now. So right now, we really have two zones we want to pay attention to. We have 1875 to 1750, and we have 1650 to 1480. So these are consolidation zones. We really need to hold above this. If we don't hold above this, there's a high probability we're coming back into this zone, and we'll have to see the decision making in this zone. We broke a downward trend line, and we did another top here. So we see this stock has had a hard time breaking back above 25. We got rejected there. People sold. Back here is when we saw people sold as well. Sell. Some of the insiders and the initial investors sell. So those are things we want to pay attention to. We did break this uptrend line as well. So if this did just go too aggressively down, we're going to want to see it recapture that uptrend. If it can't recapture that uptrend, then we see reversal. Then there's more downside. We're not oversold on the daily, so there is potential for more downside. This is pretty steep, so we're going to need a little bit of a pull up. We might see that tomorrow. It really depends on the overall markets. We saw them sell off towards the end of the day. And so if we break into this zone, we really need to watch 1750 as a place to hold. If we can't hold 1750, then this can continue to accelerate to the downside to, I would say, around the 1650. 1650 is about where this uptrend will be. This is a really healthy uptrend line. So we really want to see that hold. If we do hold that, that's a big pro. If not, we're going to want to watch breakout into this $16 to $14 range, which is a really important support zone as well. So I want to do a little bit more technicals, but I went a little too long on fundamentals. But I'll be making more videos on SoFi, a little far between than some of my other stocks that I cover. But thanks for stopping by. Appreciate it, guys, and I'll see you back again on Wednesday.